Hi, can you hear me now?
Yes.
Great, perfect. So my name is Florencia Miller, for those that do not know me. I'm the Platinum Network Creative Director, and I will be your host today. So I would like to warmly welcome everybody to our third take of the virtual roundtable series called Life After COVID-19. I would also like to let everybody know that all attendees will have their cameras turned off and their microphones muted. Panelists will be giving a space to answer participant questions at the end of the panel. And you can submit your questions using the Q&A tool located at the bottom of the screen. So before I start, I would like to thank our sponsor, ASA, for making this virtual roundtable possible. Today, we are joined by Patrice Kiiru, Group Associate Director of Equity Bank, Sidharth Gautam, Europe's Head of Sales of ASA, and Olivia Chow, Co-Chair of the Ramtech Awards. We will be talking about leveraging digital infrastructure to lower SSA remittance costs in Africa. So Patrice, would you like to start? Patrice, can you hear me?
Yes, I can hear you, Florencia.
Great.
Oh, sorry about my, I don't know what's going on with my camera. I can't seem to get it to work. So, but thanks again for inviting me for this call and for setting it up. As usual on many of these calls, I believe I'm probably the only banker in the room, which is usually quite exciting. So let me first start by sharing a little bit about equity, and then I can get into how we address the cost of remittances within sub-Saharan Africa. So equity is a financial services group that's present in 7 countries within East and Central Africa. Our group is comprised of different financial services ranging from banking services to a fintech to an investment bank, an insurance company, telco, a philanthropic foundation, and a few others. And the structure allows us to be able to serve our almost 15 million clients within the region. Our vision is to be the champion of the socioeconomic prosperity of the people of Africa. And as we believe, you cannot really separate the social needs of an individual from their economic needs. And I think we're one of the few groups that are very intentional in the social aspect, especially being a financial services group. So one of my day jobs is to build remittance channels that connect African migrants who are living in well over 100 countries to their loved ones back home. Now, if we look at African migrants, especially those that are within sub-Saharan Africa, we see that at least 50% of African migrants don't leave Africa, and they're still within there. And in many cases, they're living in neighboring countries. Now, some of these neighboring countries then exhibit the highest costs of moving money. So you'll find like the cost of moving money from Tanzania to Rwanda is on average 16-17%. Now, there's an assumption that these costs are mainly tied to regulation, but I believe that many of these costs are actually tied to the last mile side of the distribution chain. So even as we look to address or look to identify, current and new, digital technologies that will help us reduce the costs, I think we must first address, some of these fundamental drivers of these costs, which, if I can broadly state them, I think there's 3 of them. There's limited competition is one. Another one is you have complex cash distribution networks, and then you have lack of well-developed cross-border payment infrastructures that can be used to move remittances. So should I then jump into the rest of it, Florencia?
Yes, go ahead.
So let me lay out these three different drivers very briefly, and then I'll give my take on how kind of we've tackled each one. So I'll lay out how they affect the cost, and then how we can tackle them, using our example of how we've done it as a financial institution, and hopefully that will trigger some thoughts for others to see how they can do that. So, so the first one is limited competition. So some of the markets we serve will only have two main options of receiving remittances. I won't really name them, but it's some of the big players that we see out there, which then serves to create a monopoly where these incumbents are free to charge as much as they want, and they're not really looking to lower that cost. So I think the only true and meaningful way to reduce, and sustainable way to reduce the cost is to increase competition. Create or encourage an environment where more players can get involved in remittances. So then it's not just the technology alone that's going to lower the cost, but bringing more competition. Coming into a new market, each of those players then finding new and innovative ways to use current technology to then lower the cost. And a couple of different things that can be done to increase competition is one area that lacks, especially in sub-Saharan Africa, is a lack of data, right? So provision of accurate and timely remittance data to remittance companies then allows them to to then look at corridors that they want to get into. And then another one is just assisting regulators and policymakers to understand the impact of remittances in their region. And so we've kind of tackled the two of those. One is we come up with our own estimates on how much remittances are flowing into certain countries. In some cases, our estimates might be even 4 times higher than the publicly available data. And then we share these estimates with with some of the remittance partners we work with to aid them in their decision making and in their strategy. And then we also spend a lot of time with regulators and policymakers across the different countries, trying to educate them on the importance of remittances, and then not only to the remittance receiving households, but also to the local and the national communities. So a tangible example of that is there's one of the countries we're in. We appealed to the regulator for I'd say a period of about 2 years, engaging with them, trying to get them to allow us to bring in some new remittance partners into the market, and more specifically to allow us to use our agency outlets. We have about 5,000 agent outlets in that country. And after a lot of engagement, they finally gave us the green light. And I think last year we helped increase the overall remittances into the country by, I'm guessing about 20-25%. And that also, while also reducing the cost. As the more value we move, then we can lower the cost. The second piece, or the second driver, is complex cash distribution networks. Cash is still king within most of sub-Saharan Africa. Regardless of the advent of mobile money, this leg can be very complex, especially when people have to travel very long distances to access their cash. So for us, we use our agency outlets. We've got about 50,000 of them across the region that offer not just the ability to pick up remittances, but many other many other financial services, which then I think allows us to reduce our fee on the remittances, because we have other services we offer there. And so we've onboarded our remittance partners onto that agency infrastructure to enable our clients to be able to have access to remittances as close to where they live. And then lastly, which I think is a big one, is a lack of well-developed cross-border payment infrastructure. Now, the average cost of moving money within East Africa is from 10 to 20%. As I mentioned, there's some corridors, neighboring corridors that are 15, 16%, which doesn't make much sense. Now, these costs are high regardless of whether you're talking low value P2P remittances, or sometimes even trade payments, as the only option for moving money cross-border within sub-Saharan Africa is either you go through good old SWIFT, or through proprietary, closed loop systems, whether it's via telcos and the like, both of which, can be prohibitively expensive. So for us, what we've done is we've really just basically allowed our remittance partners to access, bank accounts and mobile wallets in the region by integrating to our own internal system, which allows them to push remittances into 15 million equity bank accounts at no additional cost to them, thereby slashing that major last mile cost. And we've also integrated into the major payment engines into the region, the domestic engines into the region, thus enabling them to push remittances into bank accounts at other financial institutions, as well as into mobile wallets, opening up easily about another 50 million bank accounts and wallets on top of the 15 that we hold. So thereby, reducing the cost of remittances by reducing the number of the intermediaries involved in. And so I think just to give you an example, our average fee of moving money from for our clients from within the footprint from one account in one country to another, it's less than 0.25%. Now we've been mainly using these rails for trade, but now we've moved into using these rails to cater for person-to-person remittances. So I think in closing, let me just restate those three. I think those 3 points as the primary drivers. Limited competition, complex cash distribution networks, and a lack of well-developed cross-border payment infrastructure. So I think that's it for now.
Thank you, Patrice. Thank you, Patrice. So Sid, would you like to take the lead? Let me just unmute you and start your video.
Yeah, hi guys. Can I share my screen, Patricia?
Yes, you can. Don't worry, you can share your screen. Yes.
Yeah, give me a sec. Yeah, perfect. Thanks a lot. I can't share my screen. It says host disabled attendee.
That means
sharing.
Don't worry, let me work on that.
Yeah, please, Florence. Yeah. Because I have a short, precise presentation, and I think it would make more sense, and people will, audio visual is always better than just audio.
I'm not able to do that, but I can share your screen for you. Is that okay?
Yeah, perfectly fine.
Can you see your presentation?
Yeah, I can.
Good.
Yeah, so just go to the first page, please. This is the last, I believe.
In a second.
Yeah, sure. Take your time. Yeah, it's here.
There we go.
Perfect, good. So hi guys, I'm Sid. I'm head of sales for Europe for AZA. Now, most of you who don't know what is AZA, and so AZA is we are a truly disruptive fintech. It's an overarching umbrella company of our 3 products. So AZA was till 2019 summer, same time last year, we were known as BitPesa. We are an organization who've been formed in Kenya in 2013, and from there we are going many miles up. So in today's presentation, I'll talk less about my company and more about the topic what we are into right now. So we are talking about leveraging digital infrastructure. Like what is, first let's go to the bigger picture. Florence, can you go to the next screen, please? Next slide, please. Yeah, perfect. So let's go to the bigger picture. So the global remittance industry is around $700 billion. Out of the $700 billion, the size or the pie of African business is around $48 billion. So let's say sub-Saharan Africa contributes almost 7% of the global remittance industry worldwide. So as per the, we are in the middle of a global pandemic, COVID-19, and as per the World Bank record, the global remittances will decrease by 20% in 2020. This is on top of around 8 to 9% growth in 2019. So every year the business is growing because there are more and more migrants who are leaving their countries, and suddenly we are in the middle of this COVID. The good thing or the bad thing out of it is this is the new normal. We can't, this is the new way forward for all of us. So this 20% is an overall decline. And what does it specifically meant for a sub-Saharan Africa? Is there in the next slide. It elevates, Florencia, can we go to the next slide, please? Yeah, perfect. So it elevates the poverty in sub-Saharan Africa. It improves the nutritional outcome, like why remittance is so important for low and medium income countries, primarily in sub-Saharan Africa. It improves nutritional outcome, higher spender in education, reduces the child labor, and it is a funding for the small businesses. In short, it is a lifeline for many households in sub-Saharan Africa. And that's the reason remittances is a way of life. It's very, very important for the people who are there. Next, please. Yeah. So now let's see what is the effect, how we are moving, or how this COVID-19 pandemic has affected the sub-Saharan Africa remittance landscape overall. So overall, if Patrice have also touched base upon this, the cost of sending the funds, whether it is inter-Africa or intra-Africa, is around 9%. That is highest in the world. The world average is around 6.3%. So the sub-Saharan Africa cost is around 25% more than the world average. And there are certain parts in southern Africa, which is almost high teens, 18%, 19%, even as high as 20% in some South African nations. Why? So we will touch base upon that. But then one of the primary reason is this is an excessive regulation. The regulatory environment is not very, very friendly. There is an over-reliance on cash still in the sub-Saharan African market, and the over-reliance on the USD and the G20 currencies. And the whole of a region to an extent is underbanked. So we will discuss here, and I will tell you what are the things which as an organization we are doing to help overcome it. And overall as a society, all the government have to come together and to address it if we have to reduce it. Just to give an example, the overall cost of sending the fund to Southeast Asia is just 3%. If it could be 3% in Asia, why it is almost 300% higher in Africa? Can we go to the next one, please? Yeah. So before we get into it, let's see what is in store for 2020. We were already in end of May, right? Half of the year is almost over, half of the year is ahead of us. So the original projection of 2020 was around 51 billion, from 48 billion in 2019. But unfortunately, this COVID pandemic happened, and suddenly the forecast is 23. We are just be doing around 37 billion in sub-Saharan Africa. So let's say from a 48 billion, we are now down to 37 billion, which is a 23% decline. And by the way, guys, this is the second highest decline or degrowth in the world. So apart from Central Asia, which is declining by around 27%, sub-Saharan Africa remittance will decline by 23%, which means the vulnerable threshold households, which need this money most, they will be the deprived one. So 23% is a huge, it's like almost a quarter shaved off from the remittances. And why it has happened this time is, I call it like counter-cyclical. Normally what happens in the, before when any such things happen, whether it is 9/11 or a stock market crash in 2008, what happens is whenever there is any issue with the home countries, the remittance increases because the people who are working and who are sending the money send money back home more to help the families, to help the businesses. This time everybody is affected. So most of the sub-Saharan migrants, they are either in Europe, UK, US, China, and everybody is badly affected. So that's the reason why it has enunciated more, or it has been propagated more in sub-Saharan Africa. So this year, what we are estimating is, as per World Bank, it is 37 billion. I'm still hopeful that we should be somewhere around 42 billion, that 37 billion should not come out. But then yes, as per the World Bank reports, the projected is 37 billion for 2020. Now so what should be done to overcome it? Why this cost is 9%, still 9%. We are in 2020, but still the cost is 9%. Like if you're sending $100, back home, $10 is have been taken away, which is a substantial margin. So we'll go into it. So the first and the foremost thing, Patrice also touched base upon this, is the contactless payment. That is the way to go. And I'll tell you why. It's not that it is the need of the hour. It is also because of this COVID pandemic. There are a lot of people, as a consumer, we are little averse for handling currency notes and coins because of the spread of the virus. Not only it is a health issue, might be a health issue, there is a theory, but then it is less efficient way. Cash is always difficult to handle. You have to go to the bank that frequently, you have to count the cash and so on and so forth. It is not that efficient. So with the contactless payment methods will go up. The digital remittances platforms are going up. So whatever remittances are coming, the brick and mortar shops are slowly and slowly reducing, wherein the digital remittances are increasing. So that's the first thing of contactless payment, which overall, it's not only in Africa, it's a global phenomena. It has to be more enunciated in Africa for a contactless payment perspective. The second point which I would like to enumerate out here is the enhanced distribution channel. Now, one of the major reasons why the cost is 9% is because over-reliance on cash. Because for cash channel, you need a physical infrastructure. Somebody have to go to the to the shop or to a payout network, to collect the cash. So since there is a brick and mortar establishment to collect the cash, hence the cost associated with the fund goes up. So we have to go, digitization is the way forward. Non-cash channel, and Africa was a pioneer in this, like Safaricom, I still remember 2009, Kenya was the first country to launch, or let's say the first country to launch mobile money in 2009. So that is the way forward. It has to be with the clear regulation, with the easy regulation. This is the way forward, wherein we have to stop over reliance on cash and increase mobile money and the digital bank account. Inclusive growth. Underbanked has to come into the banking system, and I'm sure government in each of the countries is working very, very hard to make it possible. Let's see the third one. The third one is the virtual KYC. When we have to go contactless, when we have to go virtual, it is important that know your customer. We are in a cash industry, money industry. It is a highly regulated industry. So rather than somebody coming and collecting the documents, it has to be the virtual KYC. Customer should be able to download the mobile wallet and then just put his ID, do a scan of his ID, and the system should do a deduping to check whether SID is SID or not. And that is happening. Slowly and slowly it is happening, it is propagating, but clearly the velocity has to be increased for more inclusive growth so that everybody should come in. The fourth and one of the very important thing is the reduced cost. So if the over-reliance on cash reduces, overall you will see the volumes, the percentages always come down, or the cost of sending remittance will obviously come down. And this is one of the reasons. With the digitization, mobile money, the bank account, this will eliminate the cost. This will eliminate this unnecessary cost, which is there. Yes, I'm not saying this will go away tomorrow, or it will take a year. It will take few years. And the good thing is, last year, 2018, the cost of sending fund to sub-Saharan Africa was 9.25% in 2018. Mark my word. This year, 2019, last year, it has been reduced to 8.7%. So yes, there is a modest improvement, but much has to do and much has to go into it. And the last one, which I should say, is the competitive rate. We know Nigeria is the biggest market in Africa, right? We all know that. It's a no-brainer. And there is a parallel industry there. So yes, there is an official channel. There is an informal BDCs there, which run a parallel market, which gives you a higher rates. That is the reason people go to those parallel market. But how come that parallel market is being able to offer the higher rate as compared to, let's say, the central bank of the country? So more and more, as the economy will come more and more into the formal channel, and that is where the organizations like us, ASA, that is where we are playing a very, very pivotal and the important role. So competitive rate is the way forward. If you are not giving the competitive rate, people will still go to the informal channel where they have to walk hundreds of miles for looking out a shop to pay, to collect the money because they are getting the higher rate. if the formal channel, if the digital channel can give the competitive rates, why they can get the money sitting at their home. They don't have to move outside, or don't have to venture outside their home for the rates. And that is where my organization, or ASA, plays a very, very important role. We have a one-stop solution for Africa. We have an API product, which we call it Transfer Zero. So, and it is a completely B2B business model. We are not going direct to consumer, but then a lot of money transfer organizations, remittance companies, neobanks, tier 2, 3 banks are using our API product, Transfer Zero, for a last mile connectivity. So it is a B2B2C business model wherein we are connected with the MTOs and we give them the excellent rate. Our rates are very, very aggressive as compared to the mid-market parallel rates. So we are giving the digitization along with the aggressive rate right at the doorsteps of a consumer, of a beneficiary. Beneficiary don't have to move out or go long distances to collect the money or the hard-earned money which their family is sending from abroad. If we can go to the next slide, please. Yeah. So guys, I'll quickly touch base upon this. Currently, it's all about trust and flexibility. Since it is about money, we require trust and flexibility out here. It has to be fast. So we have a same day settlement. It's like instantaneous. In the mobile wallet, in the bank account, it is instantaneous. So here the money is sent from US, from London, and there you go. Your family will get the money out there. It is a one-stop solution. You will get best FX with the best last mile distribution at the best rates. And we have a 24/7 competitive service, responsive service. So as I'm talking to you, we are available in Nigeria, Ghana, Morocco, Uganda, Tanzania, Senegal, and obviously EU, UK, and US. We are there. So this is the geography we are currently available. We are very soon going to launch South Africa, which will happen in early Q3, followed by Egypt. So our endeavor is to be a truly sub-Saharan Africa player. So our endeavor is not to, at this point in time, not to go to China or other countries. Our core competency is Africa, and that is where in sub-Saharan Africa, we want small businesses, small households, vulnerable households to grow and to make their life happier. Yeah, and as a matter of fact, as I've told you, like 2014 is when we started. This is how our growth, this is how the journey of ASA guys look like. 2014 is when our organization came into an inception. 2015 is when we got our FCA license in UK, followed by a Bank of Spain license in Spain. And then we got our Series A funding. And now, as I'm talking to you, we are transacting almost 120 million USD per month, which is around $1.5 billion a year. So we are playing our bit into this market, and our endeavor is very clear. We have to reduce the cost, which is currently at 9% to 6%, which is the world average. There is no reason why Africa or sub-Saharan Africa in particular to be behind the world in terms of sending the cost, in terms of sending the remittance. And that's what our endeavor is. Thanks a lot, guys.
Thank you, Sid. Olivia, would you like to turn on your camera? There you go. So since we have, oh, you need to unmute yourself. There you go. Since we have a technical issue, let me just go ahead and share your presentation. Is that okay?
Yeah, you have it?
Yes, I do.
Great.
There you go.
All right. Thank you, Sid. Thank you, Patrice, for starting that off and helping us understand why Sub-Saharan African remittance prices are so high and how we can use digitalization to move that forward. And I'm looking here with you have 35 people on this call. So thank you all for being here and, during this trying time, still educating yourself to figure out, what we can do moving forward. Next slide. A little bit about me. I'm Olivia Chow. I am co-chair of the RemTech Awards since 2018. And I am going to be talking about the innovation aspect on where we can help solve some of these problems so that we can get those prices down. And just wanted to let you know, since we've been doing this since 2018, last year, 3 out of the 7 winners were from Africa. Each year, we see a lot of innovation coming in from there. And when I'm not doing the RemTech Awards, I am the founder of Yokip Consulting, where I help MSPs with banking and US licensing. And I will say it's even more so actually in the past few months. And overall, I would say nearly 40% of my clients are sending to and from sub-Saharan Africa. It's a big market and obviously a lot of opportunity there. And before even remittances, I've done a lot of innovation in different industries, helping startups, Fortune 500 companies break into new markets. So with that, I'm going to talk a little bit more about the innovation we're seeing. How can we further increase digital adoption and reduce the price of remittances? I'm going to go into some of the entries that we've seen at the RemTech Awards, and I think it'll draw some inspiration there. So one, streamlining the digital user experience. I'm starting here with Viva. They're a leader in mobile technology solutions. So as we all know, mobile money is really big in sub-Saharan Africa. And each year they've entered different sorts of innovations that I think really get to tailoring the digital solutions to these markets. And, you know, there's arguments on whether or not how much your mobile app really matters, but the thing is it definitely should not get in the way of getting your consumer to be able to send remittances online. And so I'm just gonna go through these a little bit quickly. One of the things I thought was really impressive in 2018, they put in their entry where they were part of Airtel Tanzania's integration with Tigo Pesa and M-Pesa in Tanzania. So they made all of those mobile money companies interoperable. Before that, these 3 competing companies required, if you want to send somebody from Airtel Tanzania to a Tigo Peso account, you had to cash out, give the money over, and put it back in. And as a result of being able to create this bigger ecosystem, they were able to reduce prices by 500% and increase the P2P transactions by 102%. So that on both ways are reducing the prices of the transaction overall, but also creating an incentive to keep the money in the ecosystem when more and more people you know are using it. In 2019, they also developed technology for Airtel to allow users to make favorites on their mobile money apps, favorite people that they always send to, because one of the big problems is that when you send money to someone who uses mobile money, right, you type in the phone number, and if you type in the wrong number, accidentally you send the money to the wrong person. And with that, even if you do that, they created a way for you to do a self-transaction reversal on your own. And then I also want to highlight the fact during COVID, they've moved from an agent-based registration to self-registration as a method to help curb or help move people to more digital forms of money transfers, and also facilitating home cash in and cash out. They actually have done a lot more than that, but those are some of the ones I wanted to highlight. And actually, is Mohit on the webinar here from Conviva?
Let me see.
Because it would be great if you could speak a little bit on more specifics on what you're doing with COVID-19.
I think he's here, yes. If we are short of time, but if he can be quick, we can allow him to talk. Let me see.
How are we doing on time?
We're a little bit short on time. He can talk.
Okay.
I just asked him to unmute his microphone.
All right, sure.
Hi guys, can you hear me?
Yes, we can.
Hi,
everybody. Hi Olivia. I just logged in to listen to what you guys are speaking about, and it's a great roundtable you have put together. Just about what changes which we are seeing in the market, I'll just enumerate some of them and what we are helping mobile money providers. So as a one-line introduction for Conviva, Conviva is the biggest mobile money platform globally, which is powering almost 70 services in more than 50 countries globally. And most of them, around 50, are there in Africa. So from Orange Money to Airtel Money to EcoCash, all of them run on Comviva's Mobiquity Money platform. So we are a white label B2B company. And of course, since a lot is happening during COVID, so we are providing a number of solutions to enable all these services to reach out to their client in these trying times. So things like, number one, the service reduction. So you would have seen in Uganda, in Kenya, the service prices have been reduced. In certain countries like Malawi, Ghana, the transaction limits have been increased. What Olivia just mentioned, turning from from agent-based registration to self-registration. So in Egypt, within 1 week, we have actually enabled people to self-register for a temporary wallet, which is for 3 months. They have transaction limits lower than what the permanent wallet is, but these are 3 months temporary wallet for people to do transaction from their home while in lockdown. Apart from that, things like Free Senegal is one who has done cash in and cash out from home in Western Africa. Also, these services are used for collecting donations. For example, in Uganda, Ministry of Health and Red Cross are working with Airtel Uganda to collect donations for COVID-19. And this has been done in certain other countries like Ghana as well. Other things being that since the agents are closed or they're partially working, so people need money in their wallet digitally. So what Airtel Tanzania has done is they have introduced a get money menu on in their USSD, and they have done this innovatively by bringing it as a 0th menu. So if you will, since most of the mobile money is done on USSD in Africa, you will see it is done from the USSD menu start from 1, 2, 3, and it's like these options. But they have done a 0 get money menu where people can get money digitally while sitting at home by asking their friends to give them money or taking short-term loans, or they can do a bank account to mobile money transfer, or they can even send SMS to people and internationally and ask them to send them money. So this is the new menu they have created. It's a user experience point, but it is very essential in times of COVID. And the last one, last point I wanted to add was about, again, Airtel, what they have done is they have made their customers the reseller of mobile products. So they are encouraging their customers to recharge data for, or recharge airtime for others, and the sender or the one who is doing the recharge using, let's say, Airtel Money, he will get a 5%, 4% bonus airtime. So this way they have.
Thank you. So we're a little bit short on time, but I do appreciate you sharing all that, and we just want to leave our Q&A, but that's very impressive in what you guys are doing. And you know, this is just the start of the conversation. So we can always learn more about it. I think you know, we have a little Q&A afterwards and further on the presentation.
Okay, we can continue then. Thank you, Mohit.
Thank you, Mohit. All right. So also something else I would say then is government support. And I highlight M-Pesa here because so last year they partnered with Western Union to provide global payouts to M-Pesa users worldwide. And we wanted to catch up with them to see catch up with them during COVID-19. As you guys probably saw in the news, M-Pesa has worked very closely with the Central Bank of Kenya to waive fees, and also to suggest consumers use contactless when the World Health Organization suggested consumers use contactless payments. This spurred on a lot of the central governments in general to move towards this, but Kenya was one of the ones that actually was able to make this a reality. Other things we saw was also transaction limits have also increased for SMEs. All right, next slide. Okay, and so also we were able to look at developing the ecosystems further. I spoke with Flutterwave, which was also another RemTech entry back in 2018, and they quickly were able to use their network to create an application for store owners to quickly make shops that are now connected globally. And this includes mobile money wallets. I add this because I really think having more reasons to keep your money in the digital ecosystem, particularly with something like mobile money, will spur the increase of adoption. They also made it easy by partnering with existing third parties for the logistics, like Sendi in Kenya, Sendbox in Nigeria, and making it so that people who were shutting their doors in their physical locations could now go online. Next slide. All right. So another thing I want to highlight was increasing interoperability in general. We did earlier with what Viva had done in Tanzania, and we already saw how that dramatically reduced the prices of remittances. Leaf here is using USSD with blockchain, and I've spoken with them before where they said that the user experience is actually very similar to mobile money. So then the question is, why do we need something else that's like mobile money? Blockchain potentially is something, especially the way they're using it, they're using one that would be accessed by anybody and anywhere, could potentially alleviate some of the complications that we've seen with technology in Africa and who is allowed to use it and when they're allowed to use it, as government is a good thing when it's supporting it, but also we all know that competition is something that helps keep prices low, and interoperability also helps keep prices low. So it's this balance of how do you partner with each other while encouraging competition, and here's a possibility where that could be. I want some of the people, I do want to ask more about, have people speak on this, but I guess we'll get through. We have a Q&A afterwards, so I can include people there. All right, so next slide. I do want to let you all know, so those are some of the entries that we've had from the RemTech Awards and how they're finding solutions. If any of you are working on some that are, have been things that you think can solve some of the problems that we've been talking about, that can spur on the adoption of digitization, or just, it can also be on the compliance side. We are looking for entries. Some of the reasons why you'd want to enter. We are going to be doing the ceremony at IMTC World 2020, November 16th to 19th, obviously pending any second wave that may go on, but we are cautiously optimistic that will happen. We, of course, will do the safe and sound thing, but this is where we are planning for it so far. And the winners will also get trade show space at IMTC World, and as well as the trophy and a bunch of other stuff, promotion, things like this. Will be, we're here to really just support the innovators and letting other people know about them. So that is my presentation.
Thank you, Olivia. Let's see if we have any questions from the participants. If you would like to submit your question, you should do it now. Olivia, do you want to go ahead and pick up any questions from the Q&A to see maybe which of our panelists can answer it?
Sure. This one is for Sid. How the formal sector can reduce cost of remittances versus parallel markets?
Sid, you're muted. Would you want to turn on your microphone?
Can you hear me now?
Yes.
Oh. Yeah, thanks, Olivia. A very informative presentation and talk by you and Patrice as well. And thanks for the question by the anonymous attendee out here. So one of the reasons, why, how the formal or what role the formal sector have to play here. So like typically remittances sent informally have more favorable rates, but they are less secure. With digitization, the formal sector to offer comparable rates to the parallel market, and more customers will start using the legitimate channel. So like there are many organizations whom we are empowering in Europe who are sending money in Africa at a very, very favorable rate, which is at a parallel market or at an informal market rates or at a parallel market rates. So that is what the digitization is the way to go. It is 100% secure. Customer don't have to move out. he can get the money at a mobile wallet or in their bank account. I know like not everybody have a bank account, but mobile wallet is a way forward. So if somebody can get the money sitting at his home in the mobile wallet at the same rate as that of a BDC in Nigeria, or you know, that of a parallel market, why he or she have to move out? And that is what organizations like ASA, through our API solution, we are empowering the businesses and the houses in Africa to overcome this challenge.
Great, thank you, Sid, for answering that. Olivia, here I'm seeing a question for you. What are the problems you're interested in seeing entries address?
I think one of the big things that we are interested with the RemTech Awards is seeing how we can use the money transfer community and those in remittances. How can we use that network, the pipes, the regulation, and also the relationships to leverage that for other things those community members need and the people in the diaspora? Is it micro lending? Are those the type of things that we're looking for now? Another reason, we talked a little bit about KYC barriers. Are there new ways that we can make it so that documentation, things like identification to sign up for things digitally can be lowered? Some of the other things we have been looking at is, you know, more of an ecosystem. So one of the biggest barriers for why people say they don't have a bank account or a mobile money account in Africa is that they don't have enough money. So, you know, that's not something one person can solve or one company can solve, but that's an ecosystem issue. You know, how can we bring more development in general to Africa so that people have more money that they can use in their bank accounts, and also lower any sort of fees or barriers to entry. And also educating people on, you know, maybe they don't need as much money as they think, or what is the financial education that's going on there. So I think those are some of the things that would be really interesting. I also would be interested to see the way blockchain starts to pan out. I mentioned a little bit about Leaf in my presentation, who actually is Tori on the call?
Let me check. Could you say the name again?
Tori.
I don't see.
Or Nat?
Here, Nat, yes.
Okay.
Yes.
And I just wanted to ask, or have them speak a little bit more about the way that blockchain can help with interoperability.
Sure, if she can keep it short. There you go. Nat.
Yeah, thank you.
Oh, sorry, Nat.
You hear me?
Yes.
It's okay.
Thank you.
Thanks so much for letting me answer. We're in early days, still exploring, but I think that was some of the opportunities we saw with the technology. Is it's able to do very small transactions across currencies very cheaply and very quickly and very securely. We are also betting on the public nature of the transaction that are posted on blockchain to make it easier to integrate into other licensed entities. And so our approach is we want to work with the existing regulated industry players and then just provide a faster, cheaper way of moving funds between them. And that's what we've developed with our wallet, but are, I think, seeing a growing demand during COVID. And so we're really looking to explore this further, and would love to chat with any of the participants afterwards if there's more questions.
Thank you. So we have time for one more question. Sid, do you want to go ahead and pick one from the Q&A?
Yeah, sure. So let me, this is for you, Olivia. What are you seeing driving interest in the US bank accounts and licensing from Africa?
Mobile money. I think, it's the fact that the infrastructure is growing in Africa. There are a lot of companies coming in that see that as an opportunity, that, a lot of the big companies aren't catering to it. They're not adapting fast enough. I do think there's some regulatory barriers as well, but a lot of them are finding innovative ways to be able to get that money into the ways that people like it, and they see it as an opportunity. So that's been a big driving force that I've definitely seen. And I like it because I do think, like, again, ultimately competition is going to keep those prices down or bring it down, and having free markets for people to really come up with the best ways to reach people.
Great, thank you. Well, I think this is everything. We will try to answer the rest of the questions back at the forum at the PNET community. So I would like to thank you all for joining our virtual roundtable today. I hope you enjoyed it, and I hope you enjoyed this interesting discussion. I would like to thank our amazing panelists. Thank you, everybody. And thank you to our sponsor, ASA, for making this possible today. I invite everybody to stay connected and keep this conversation going at the PNET community. So you can enter at theplatinum.net. So thank you, everybody, for joining us. Have a good day.
Thank you.
Bye.
Bye, everybody.
Bye. Cheers. Bye-bye.